What up, what up, what up, YouTube? I'm back again. Took a little week off or whatever because I had this shit. I had to get myself prepared for this personal account that I made. But this is going to be a weekly prep video for the trading week, Sunday to June 29th, and then Friday, July the 4th. So we're going to get right into it. Stay tuned. All right, so I feel like this trading week should be pretty easy because right now I'm not looking to it's a risk on market. It's like a heavy risk on market right now. And it's easy to see. I mean, the first things I want to point out is we got right here my monthly volume imbalance. I can zoom in on it real quick. So you got the monthly volume imbalance right here to the left. I mean, prices closed at 96,707, and then on the next candle, prices opened up at 96,765. So from 707 to 765, that's the volume imbalance right there. So it's pretty easy to tell that we basically in a risk on market until we get to those prices at the very least. Those are my first prices. Those are my first discounted prices on the dollar. And that's on the monthly time frame. We're going to drop down to the daily, and then we're going to just look at the premiums real quick. Not looking for the market to go into too many premiums this week, but you know, if it does, these are the prices I'm looking for the market to trade to. So you got some premium prices right here as a volume imbalance right here, but I didn't mark those out because those are expected to get traded to anyway. So if they go there and they turn around, then that'd be a surprise to me. But if they go there, I'm really expecting them to go to these prices, these premiums right here. So you got, this is a premium volume imbalance, and then you got some more premiums up here. There's a premium swing high. So once again, it's like a risk on market for me this week, but I'm looking for the market to go into the premiums first. So we may even spend this whole week going into the premium prices. We might not even go into these discounted prices first. We might just spend the whole week going into these premiums. So in any event, yeah, that's what I'm looking for on the dollar. I'm definitely looking for the dollar to be like a risk off kind of market in the beginning of the week, just because we got to get to these premiums. But overall, I'm looking at a risk on market. And so you're here on a continuous contract for the NQ. And the first thing I wanted to point out is we already made all-time high prices on a continuous contract with the NQ. Jump over here to the ES continuous contract. We did the same thing. We already made all-time high prices. So why is that important? Because if you go to the front month, right? Go to the front month on the ES on this is the 4-hour time frame, but we're gonna zoom out to the weekly. Zoom out to the weekly. See, we didn't make all-time high prices yet. So the front month contract didn't make all-time high prices on the ES. But if you go to the continuous contract, we already made all-time high prices. Now let's go to the NQ. The front month for the NQ, we didn't make all-time high prices either. But once again, on a continuous contract, we made all-time high prices. So that's important to know because I'm already in kind of like a risk on scenario for the dollar. And then, so that means for the future, we're supposed to be buying the market. And the fact that we already made all-time high prices on these continuous contracts, but the front month still didn't follow up yet. That's important to know. So this week should be easy. This week should be easy. For another thing too, right? You see how close the NQ is to making these all-time high prices right here? That's another good sign to know, like, yo, we buying the market. We definitely buying the market. Because if you go over here to the ES, look at how far away the ES is from making those all-time high prices. So that's important to me. That makes a big difference because that lets me know that, you know what, on the ES probably gonna get real volatile when it starts trading. when it's time to trade above those prices, ES probably gonna get real volatile. So, and the market just opened up too, probably a couple hours ago. So it's already trading higher to get to those prices. So, we're gonna go to the daily time frame. I'm only looking to buy the market, and I want to buy the market from premium prices. I mean, discounted prices. Definitely not premium prices. Discounted prices. I only want to buy the market from a discount right now. So the first prices that I'm pointing out are these daily prices right here. This is a fair value gap right here. Daily fair value gap. Daily fair value gap discount. And then you got another daily fair value gap discount down here. These two prices right here are like my prices for the week that I'm looking to basically buy from. And those prices are kind of the same on the NQ. Fair value gap right here. Fair value gap right here. These are my discounted prices. I wouldn't mind. I don't even trade the NQ, so I don't even know why I marked it up, but I'm starting to notice that I'm marking up the NQ, but I'm still not going to trade it. Usually I just only mark out the continuous contract just so I could like have it and contrast the differences between the continuous contract on the NQ and then the front month on the NQ. Then I compare that to the ES and the front month for ES. But yeah, those are my discounted prices. There's no need to put premium prices because the premium prices are at the all-time highs. So those are already marked out. And yeah, so this week should be easy, man. If you plan on buying the market, you should be buying the market from a discount. And selling the market right now, I don't even think you could sell the market into the discounts because the market is just being so violent and crazy. Like you got a whole bunch of war stuff going on, so it's making the market get real aggressive when it's moving and volatile, and just a lot of people are coming in and just volatility is getting crazy. So I wouldn't even sell the market into the discounts. I would just only be looking for a reason to buy the market. But yeah, that's it.